Monday, March 1st, Wednesday. Oh, it's not Monday. It's Wednesday, March 1st. Sorry. Standard market analysis. And we always start out with the stock market indexes, as we will this morning. Now, this is an interesting situation. We've got some new lows. We've got some oversold conditions. We've got some market action that appears like it's trying to turn around. We almost have an official buy signal. So let's take a closer look. The S&P 500 spider made a minor new low for the trend down recently, the last few weeks, but a very small number of ticks. It's currently a little higher than where it opened, which is slightly lower, and is slightly lower on the day by a third of a point, which is nothing. During our conversation this morning, my market analysis YouTube this morning, it may very well start to be green. That's higher on the day, and that's exactly what I'm hoping for, kind of expecting, and it will start to save this head and shoulder bottom formation, which has gotten a little goofy here the last week or so, closing at or above or below the neckline, dropping a little too darn much, including today, but managing to hang on. We just don't have any downside follow through so far. We don't have any upside follow through so far. The key here is to close above the high on February 23rd for the spider, and that would be above 402.20. And we're 95, 395.86 at the moment. So it's not a small amount, but it's not a really large one either to rally, 6-7 points and stay there. All you need is a little zip pop bang here, maybe some new news, etc., to cause that to happen, and then we will be on our way up to challenge the trading range in the 410 to 4 high teens area, which of course is at 418-ish, the highest high for many months, and the perpetuation of a long-term bull market, which I still think we have the potential of. I'm still claiming that the bull market of 2023 has started. I'm having a little trouble justifying the continuation of it because the neckline is not behaving quite right lately. And I remind you, you can never make the market do what you want it to do. You always have to move with it. So if I'm wrong, then the market's right. Of course, the market's always right. I just want to be right early and give you the right reasons, et cetera, et cetera. So we're down 40 at the moment, which is nothing, 0.4 on the spider at the moment. Sideways trading range for the last hour and a half, something like that. Now, the left side of the screen is your 1 minute spider vertical bar chart. So a lot of white in the sideways range here, between 395 and mostly 96.5, 95.5, and a 1 point range. Now, enough said about the spider, which is messing around with the neckline in a weird way for the last several days. Let's go to the DIA. Now, this is a little different situation. The spider is not oversold. It got a little below 30, but I love 25 for my oversold levels. And the DIA has again dropped below 25 earlier today, turning the daily data yellow, meaning a turn in the market is likely, but we don't know exactly on which day, but very soon. It could be today. It looks like it may be today. What happens if we rally enough, which wouldn't be too much more, above yesterday's high? Then you have a bullish engulfing and the oversold condition, and it would turn the price green just like a few days ago on February 23rd, which didn't work. But I keep mentioning that my bullish engulfing ER buy signals sometimes cluster, having 2 or 3, and I've even seen 4 of them within about 3 or 4 weeks. So now this is 1 week, and we might have another green one if we can get above yesterday's high and stay higher on the day. So I'm watching very closely for that. Needs some upside follow through, obviously. The next index to turn green will be the S&P because it's only down 30, now 26, 25, hardly anything. The QQQs, they're down a little bit more. They're down on the day 1.8 at the moment. They came very close to the low last Friday, so a little double bottom is possible, like the spider. And the Qs are lagging behind. So once the spider gets higher on the day, if it can, then I hope the Qs are going to follow suit, but it's not oversold either. So we're not going to get a green bullish engulfing on the QQQs, unfortunately, but it did test support. It is so far a minor, very minor double bottom, and it's not too far away from, well, now it is being oversold. So the RSI really doesn't come into too much play here for the QQQs at the moment. But remember, please, the QQQs broke out of its head and shoulder bottom way back here on January 23rd, over a month ago, tested the neckline a couple of days later, which is typical, and ran up almost or approximately 50% of the minimum upside objective. And on the Qs, that would be way up here to about 347. 347. We're at 292. So that's a very, very big move up from where we are. Now, that's my expectation. I'm still bullish. The head and shoulder bottom formations that developed in the stock market indexes starting in June are still intact, although they may have a little scratch or two. They're not ruined, they're not broken, and lower levels would begin to do that, especially on the spider. Then the DIA would get ruined, and then lastly the Qs. Talking about a continued bear move down, which I do not expect. I am looking for higher levels, and I'm looking for confirmation of that vis-a-vis the price action having bullish engulfings and or ER buy signals or a variety of other little tools I've got. So I'm bullish in the stock market indexes. Let's see what develops here. Hopefully things are going to turn out to be bullish very, very soon. Aha, we've got some new signals and futures today. So I'm going to start out with the corn market at the moment, which is not a new signal. Yesterday, I went on and on and on about the major downside breakout, new lows since August, but it's oversold. I'm warning you, and you can see what's happening here, that in this significantly oversold condition, and it got more oversold this morning, but now we're higher on the day. And I think a little rally is starting, but it's still a bear move down. I'm looking to go short on a rally. I'm bearish on corn, and we have a major long-term downside breakout. It's not unusual to see it rally back up to the resistance area, the old lows, which is doing right now. That could be it. But I think because it got so oversold, we could rally back up to maybe 647, maybe even a little bit higher, and that should be a better shorting price if it could do it in the first place. But I'm bearish, point blank. I don't like selling it in an oversold condition, though. Next chart. That was corn. Here we have high grade copper. Not too much to say about a high grade at the moment. Platinum, and this is the 1, 2, 3 precious metals. All have bullish ER buy signals. This one was 2 days ago in platinum. It's working great. We have a new high for a couple of weeks. The market yesterday came down right smack dab into the ER3 buy area, and we almost bought the exact low of the day yesterday. Very, very good retracement, and up we go. That implies that if you got long around where you should have, you would never have had a losing tick. Next is the buy signal we have in gold yesterday, which I absolutely pointed out. So the same thing here. Gold came down to our ER3 green dot, which is exactly where ER3 is supposed to go long. The price level was 1830.2. Today's low is 1829.6, a hair below the bid. We bought the low for all practical purposes, and we're going straight up. This is a new high for several days. It looks like it's going to be a new high close. We should be on our way up in gold. How far? 1,873 at a minimum, I think. And I would not be surprised to see it get up soon to 1924, 1,924. Yeah, that's what I'm expecting. Please notice that this was oversold for 1 week, 2 weeks, 3 weeks and a fraction. And this is the second buy signal. The first one didn't work. We took a small loss. This one's working perfectly so far. Perfecto so far. ER1 got long around 1827. And that's approximately what we bought the ER3 at today. So yesterday and today, new long positions, ER1 and ER3s, we're off and running. Next chart is silver. ER1 got long yesterday. ER1 always gets long or short, depending upon a buy signal or sell signal, the day of the green or red, period. So we're always in a trade. It's a matter of, whether it cooperates or not and makes some money and so on and so forth. But now we're just around unchanged, and the low is extremely close to the ER3 bid. We just need a little bit more strength in order to look a little bit better, of course. I'm trusting that it's going to do that very quickly today, tomorrow, very soon, certainly by the end of the week. This is Wednesday. And I like what I see. We got buy signals on all three precious metals. Next, that's not going to happen very often. Cattle, today, a brand new short sell signal. We have a bearish engulfing red ER sell signal. We were overbought within the allotted amount of time, and we have an outside bearish engulfing today. So my recommendation is to consider going short cattle. Use a protective buy stop, commonly called a stop loss. I don't like that phrase. I use protective stop around the high of yesterday or slightly above. And that's your risk from wherever you go short, at least initially. Okay, next chart. And I've got an alarm going off on corn, which I'm about to get rid of. Give me 1 second here. I just want to lower that line. Come on. Don't give me a problem. I guess I clicked too quickly. I'll just lower the line a lot, so it's getting out of the way. I'll put it back later. Okay, here's the cattle again, and wheat. Oversold for 3 or 4 days, probably going to rally back up to about 730. The last signal was a sell signal about a week ago. It's working fantastically. This is a new low and a new low close for the whole trend. What can I say? It's working great. Next symbol, the E-mini, ES. Now, we're fiddling around with that neckline like the spider, which is now dropped a little bit, down 90 cents. The DIA is still up a $0.50 and was oversold and could have a bullish engulfing, but again, it needs to make it above yesterday's high. Didn't do that yet. The E-mini is a little in jeopardy, like the spider. We need to have some strength. We need to see some upside follow through. We need to see a close above last Thursday's high. Next chart. Overbought like crazy on cocoa, so don't go running after this market. Don't go buying into markets that have been going straight up. You're buying into an overbought situation, and it is highly likely that you will get your head chopped off, and it'll suddenly, like overnight or whatever, open in the wrong direction, and you'll have a problem. Nobody likes problems. Next chart. Bean oil. Bean oil. Not much to say about soybean oil. Next. Got overbought, starting to come down in OJ. Next. Nothing to say about live hogs at the moment. I'm also going to pass on heating oil, except watch out for these two green support lines. We start breaking the first one, we'll be starting to make new lows since October. And the next support line is incredibly important. It's a new low since last April, almost a full year ago. And if that one's broken, which would be pretty likely, then we're going to see a major long-term bear breakout on the downside for heating oil. Of course, spring's around the corner, so one should not be particularly surprised. I wish it was coming sooner. I still have several inches of snow outside, and I live in the Sierra Nevadas. So we just got clobbered twice in the last few days with a lot of snow. Maybe the drought can be considered over finally in California. I'm not the one to say, but a lot of rain and snow. Coffee, no comment, except I have to have it in the morning. Sugar, along with it. Soybeans, also no comment momentarily. Cotton, we had a buy signal a couple days ago. I told you about it. We got down to the bid, the yellow green dot, plus a little bit lower. So ER1 is long, definitely. ER3, you had 2 days of opportunity to get long there. And now we have a new high and probably a new high close. Looking good. Next, crude oil. Long-term bear trend, slowing down. I think we're going to break out to the downside. It's been forming for several months now, a big sideways trading range. You might consider calling it a pennant, but it's relatively flat. Next, natural gas. I already talked about the bull signal. We did get down to the bid for ER3 the next day, which is exactly what the system is built for and oftentimes happens right on schedule. And we are moving up very nicely on heating oil, natural gas, on natural gas. Next, a buy signal did not work on interest rate futures. This is the 10-year notes. Now, please pay attention because this is important. We have a new low for the move on the 10-year notes, implying higher rates. But the last couple of weeks have been oversold. I think this is a spring that's getting compressed, ready to jump back up again at any moment. I like the way this looks. I think you should be putting new long buy stops someplace above the market, relatively close, in order to catch a very quick, sharp rally that would start a new bull move up. And it could be extremely profound because we're also maybe developing a very broad double bottom since last October. I like this area. It might go a little lower, but none of the comments I've just made would change. I think we're very close to turning up. That was 10-year notes. The bond market should see the same thing here, and it does. Oversold now for about 2 or 3 weeks. We had a bad buy signal. I would not be surprised to see a buy signal all of a sudden in the next few days, turning the daily price action green. Hasn't happened yet. Be ready to be a buyer of interest rate futures very soon, I think. And now back to high grade, neutral, and platinum. So we've covered these charts. Thank you very much. You have a great trading day. Stay in Ehrlich.